Good day, everyone. Okay, emergency live stream. I was going to record a video, but I decided to just pop on a live stream here. I'll get this link shared out.
Good day, everyone.
Oh,
Okay.
that's the live stream starting. At least I know the audio is working. Okay. Welcome, everyone. Of course, the title is a little bit of a clickbait, just for fun. But I think there's some nice ideas here on Doge. And yeah, I was gonna record a video, but I'll just do it live. Just hop on live stream for a little bit and cover a few concepts, and then I'll probably be off for the day, hopefully. Congrats. Adventure Player says, hey, lucky I long Doge at the Pico bottom yesterday. Thank you. Thank you. Awesome. Give people a few minutes to get in here. Jarvis says, why do I have the king icon? Well, you're a king. I actually have no idea how you get those or what they even mean. Nice. Dr. Minga says, just saw the video shared on members. Much clear thoughts there, brother. Yeah, I mean, I'm doing my best to navigate this price action. I'm happy with it so far. I think this still all holds together pretty nicely. But just not to bury the lead for anybody, my validation for my Doge long is price coming below here. I think this region's all really important. Probably some ideas where the correction could be done here, and we start pushing up into this high. I can talk a little bit about how I traded this. I'm kind of interested to just kind of hear from some non-members about this whole thing could be interesting here. Maybe I'll answer some questions. I do want to rethink the higher targets here a little bit, but certainly the targets are well beyond these range lows. Oh, the mic is loud. Let me turn it down a little bit. Is this better? Wait, does that even turn it down? Oh, those are headphones. Oh. Wait, this should be better maybe. Let me do this, hopefully better. Yes, no, talking loud. Oh yeah, it's not peaking as much. I think that's a little better. But boy, oh boy, this has been really nice to trade on Doge all throughout here. So it's just awesome. I'm going to talk about a few concepts here that I think are important for people to understand, especially newer traders or losing traders or everybody that doesn't understand some of this stuff. Okay, mic is too low now. So let's go higher. Let's do this. Hopefully, you know what? I think this is probably fine. If it peaks a little bit, sorry, better maybe louder than too quiet. Okay. Well, I'm just going to do a quick run through, and I want to say something that is so obvious that you'd have to be dumb not to think it's the case, which is I've taken losing trades on Doge in all of this price action. There's probably no way to take any kind of large series of trades without ever taking a loss, right? That's just silly to think otherwise. You're detached from reality. But I'll say this, and I'll say it very emphatically. The way I have traded Doge here is borderline considered impossible by most professional traders. People with 20 plus years experience would say that I'm pushing on the boundaries of what is perceived as even possible. And that's just the truth. And that doesn't mean I haven't taken a loss, but people seem not to understand. It's kind of like this. Like would be the extreme analogy. We all know winning the lottery is kind of a hard thing to do, right? Lots of you have probably played it, never won it. So if someone wins the lottery, that's pretty lucky. If they win the lottery and then win it the next time they play, you'd be like, whoa. And then if they win it a third time, you'd be like, holy shit, what is going on? But then if they lost it the fourth time, you wouldn't be like, oh, that's not even a big... He loses the lottery. Sometimes he plays it too. And then he wins it the next time. You say, yeah, but he doesn't win it every time. Well, of course, right? There's no expectation in the realms of trading, if we're looking at probabilistic events, that you're going to win the lottery every single time you play it. But if you won it half the time you played it, that would be pretty shocking. If you won it 1% of the time you played it, that would be pretty shocking. So you have to understand that to talk about an extreme edge and almost near perfect trading, you're not talking about winning 100% of your trades. That's ridiculous. But so anyways, let's talk about how I'm positioned here. For many of you who have been, and I'm just saying it's not bragging, it's just a fact. There's almost no better possible way to have traded this in reality, right? Like if somebody won the lottery 10 times in a row and then lost the 11th time, you could say, well, you could have done it better and you could have won it 11 times in a row. But we're kind of at some point getting outside the bounds of reality. Okay, so let's go back to, I am in a long on Doge, obviously. I'm going to explain it. I'm going to explain my thoughts here. But when I say that I've traded it to near perfection, I mean, I can't even begin to, it's like even when I review these updates, it's so perfect. It's insane for like weeks. So anyways, this is why I'm trying to explain this to you guys. I did a post in the Elliott Wave crash course here because I had made a whole video about the idea of that high, and I'd made a video before that of that Pico bottom long, and there's 12,000 people in the Discord, in the public Discord. Most of these reactions are all members. Members are very engaged, the paid members, but public Discord's very unengaged. This is life-changing, right? This is life-changing. This is like such an extreme edge that it's you just can't afford, if you're a trader, to be seeing this kind of thing. If you're an aspiring trader rather, and ignoring it, because if you are so detached from reality of trading that you don't understand what's even happening here, which is almost on the verge of impossible. Okay. So we're going to go back to, we're just going to look, I'm going to kind of go in order here. I longed the Pico bottom of this on Doge. I've shared all this on X. Actually longed this too. And I actually want to talk about this setup because it's the same long setup I took here on Aster. But, and it's actually similar to the other Doge setup I took. But we'll talk about that maybe at the end of the live stream. But if you've been following my Doge updates all throughout the weeks, I mean, it's pretty close to perfection. And people would probably say what is being done here is, most professional traders would say it's on the verge of impossible. But here I am doing it. So, all right. Well, like if we go back, for example, to just, it's kind of hard to imagine that this was only 3 days ago. That's this short setup where I'm forming this idea. That is the long idea. You know, this is where price is now. And I even got intermediary trades into here. But I'm already long from here. And if I scrolled up some more, we would see some of that. But anyways, and I made a whole video. And I'm assuming most of you follow my content. I put this on X as well after the fact. But here's me explaining I'm going to take that short. And this is, just for context here, this is this short. Okay, and I'm going to explain because here's the thing. If you're following my trades, and there are people who do, and there are people who copy them, and I'm going to address copy trading in a second, and you're losing money with Pico bottom, top long, top short, bottom long, top short, bottom long, top short, bottom long, and one trade loses. You literally have somebody telling you the lottery numbers, and all you have to do is type them in, and you are losing. And obviously there's lots of people winning, but I'm talking specifically to the people who are losing. And obviously there's going to be people who are, part of that is going to be risking too much. So that's what I want to talk about. The other thing is going to be, you're picking and choosing your trades that you think are going to work. So, you know, you might be like, well, I don't like this short, it's too bullish. I don't like this short, it's too bullish. I don't like this too long, it's too bearish. Okay, I'll take this long. I didn't take the other 5, 8, 9, 10 trades. I'm taking just this one. That one loses, and then you say, oh, I'm not taking any of the other ones. You have to look at your trading as a series of trades, right? That's how your edge plays out. You know, the example is, it's a great example by Mark Douglas. He talks about a casino. They have a roulette wheel. That roulette wheel, it has an edge built in for them. They're guaranteed to make money mathematically over a certain amount of spins. But they're not sitting there watching every player spin and say, what the fuck? That guy just won $100. I thought this was meant to make me money. Whoa, he just won again. They're not looking at individual spins because they understand the other player is going to win some, 49% or 40 and a half to their 50, whatever. I think they have a 1% edge on a roulette wheel. They just let the wheels keep spinning, and they're going to print infinite money over time. And of course, an edge like I'm describing here is much more than a roulette wheel, but it's the same type of idea. But if you're ignoring this kind of thing or don't understand it as a would-be trader, then you're so detached from reality, you'll just lose money forever. And I'll be honest, in a way that's fine, because that's how a trader like me makes money, right? There has to be traders like the average losing trader, which 90% plus of traders or would-be traders lose money. And that's how a small percentage can make money. All right. But anyway, so that's the short, just preparing to take the short. I had longs running as well. But anyways, I had the scalp longs running, preparing to take the short, and I shorted and just so you know, like those scalp longs for me, just off there, I make $10, $12, $13, $14,000 just scalping this last little leg here. So because people say to me, like, people say stupid stuff. Like, I had one guy say, this was years ago on a Doge trade I took. He's like, real traders are longing for, whatever, 10x moves, 1,000% moves. And here's this clown trading a 5% move on Doge. It's like, this is, you make 15 grand on a 1% move. It's all about having an edge and executing it with risk management. Anyways, I literally just Pico top shorted and just explained that, hey, as we pass the daily close, I head into my evening. I'm happy with how I traded this. I got longs the entire move up, shorted the Pico top of the day. And I don't know what's going to happen. But I had put all my attention on Doge. There really isn't anything else for me to do. Most of the price action will likely play out while I'm asleep. Whether this is a move up through my entry or a move down, all I can do is see where we're at tomorrow and see what presents themselves. So we ended up, this is where price is now. This is a pretty big move to the downside. Woke up, got a nice short. And hey, I'm not saying I didn't take any losses in here, but you can see the red part is how much you lose. The blue part is how much you make. So one trade pays for many losses in theory. And we have to understand something called position sizing, or you're a moron. I'm just being honest. I mean, it's so stupid. Like, I'll have people who clearly follow all of my trades because they'll make some derogatory comment on every single trade I take, and they'll literally talk. You could win 10 trades in a row like this, and they'll talk about one loss you took for 4 months. And every comment, what about the loss you took? It's like, dude, you are so dumb. It is unbelievable. Of course I'm going to take losses. So anyways, this was scalping, micro price action here. This is kind of funny because, well, hopefully we don't get the running flat variation of this trade. And we, in fact, did get the running variation. This was just scalping low time frame 1 minute chart. This is me posting. We got this big move down on Aster. This, whatever, it was like 15% or something. This was me posting it the other day, but the level didn't hold up for a long. Anyways, end up waiting, and longed the Pico bottom on the 1 minute chart. I said, there's my long trigger. That's my long. And price just goes straight up. And I said we might have bottom ticked this B on Doge. And we did, in fact, bottom tick it. Next day, wake up. Prices move 4 or 5% off the Pico bottom entry there. And I made my plan for the day, which was, hey, I would like to see another push up into this level, which I did even scalp some longs here. This was a nice 3% move or something. And then shorting the Pico top of the day back into this level. And I want to, this is where I took the loss on this ad, right? I already have swing longs from lower, but I took a loss here on an ad. And I want to talk about this setup because it's kind of an interesting one. But, you know, that was the idea. We ended up, obviously, price came much lower. I talked about taking a scalp long here. I just said, not going to lie, it's too scary to long here. I'm not going to take it. It just looks too bearish, the way price is coming into the level. Maybe just wait, let the short print and wait for let the trend nuke. And so anyways, this is the trade I lost, trading as a 1-2. And we're going to get back into the live chart right now, and I'll share some of my ideas. So just to, and I had a limit order here on Aster. I went to sleep with a limit order. And I usually don't trade limit orders. I don't like them. I thought this level looked nice, but of course, you know, one of the few times I'm trading with a limit order, I would just never have taken that trade live because just literally, I mean, I would have gotten out of this a lot differently if I didn't go to sleep with a limit order. But I just explained in the members Discord why I'm still looking for a long, and I even like one more little move down through these lows. And we did actually get that, and we're bouncing off of there right now. So that's where we're at now on Doge. Let's remove some of these channels. So just for context, longs. So this is a setup I'm actually going to talk about now because it's kind of an interesting one, and then we'll move on to my thoughts on Doge. So you'll notice if you go and watch my video, you know, what was my short target for this short on Doge. We'll just rebuild the structure just to make the frame of reference. My target was actually coming back into this point of control of this consolidation. And local 618, nice confluence. This is the 15-minute chart with the idea of coming in, tagging this low, and then putting in our higher low, invalidation below the 786. We did bounce from the 786, came back up above entry briefly, and then sold off, right? And then we had this bearish move back into the lows. And I'm going to talk a little bit about that, but I still have a long from these lows. But so that setup, basically, if you have a bullish idea for me, I like to use Elliott wave perspectives, but it's more whatever your level of support is, right? So I have this swing long on Doge and price is bouncing, and I could go back, but I won't, about this, some of these long setups into this low. But the idea being a nice confluence back into the 618 and validation below the 786 into the previous point of control. So this is and it can play in the bullish scenarios as your 1, 2 before continuation. And that is, I had a bullish idea from here. I already had a long, I had a short. That was my TP on my short with the bullish idea of a 1, 2. And that was actually, if you'll notice something, there's not so much of a difference between the price action here on Aster. So this is where, I was bear posting Aster. I did get a nice short eventually into that move. And then I Pico bottomed along here. And I'm not going to get into the whole idea because I did it in the public Discord. I did a whole video explaining, or a series of updates explaining why I'm Pico bottoming that long. But I also took an add to my longs, and the setup was the exact same thing, right? So it's sort of, if the bottom is in for the bullish ideas, then longing the pullback, and a really nice kind of way to set up that long, in my view. It doesn't always work, obviously, but I find it's a nice consistent way to get into the pullback, is you oftentimes have a region of support, and typically, not always, but you're going to actually have a nice channeling structure into the level. And arguably, we didn't quite have that on Doge here. It wasn't as clear. But we had that 3-wave channeling structure here as well on Doge. So that can be, it's not necessarily have to be a perfect channel, but generally speaking, looking like a channeling structure. That can be a really nice confluence into the pullback and a move to the upside. And you don't necessarily have to have all these complicated Elliott wave ideas to trade something like this, but it could be prices ranging. You've had a big move down. It's clearly, it breaks out support and it comes back down. And the way I like to set up that trade, you can try to get cute and try to like Pico bottom the 786 or one of the levels, and have like super tight invalidation and trade the 1 minute chart. Or maybe you've developed some skills, you've traded setups like this 1,000 times on the low time frames, and you can do that. But I think generally speaking, a great way to trade a setup like this for the pullback is into the 618 region. Sometimes you have some adjacent lows. With a stop below the 786 point of control, you have this nice pullback, and that was the long setup. In my case, I closed my long here. All right, so that was the setup I took on Doge that I lost. But if we use the, clean up this chart a little bit. If we use the analogy of the casino, well, my roulette wheel, one of my games is this game, right? The higher low. And I played the game. I let the wheel spin here and I lost. But I let the wheel spin here and I won. And I let the wheel spin here and I won. And the edge is not in the individual outcomes. The edge is in taking this setup when I see it, taking the money from the ones that win, taking the losses from the ones that lose, and making sure that I'm not betting so much on any individual trade that 1 or 2 losses wipes me out. It's that simple, right? If you're a casino and you get a roulette wheel, well, hey, that might be a great way to print infinite money. But if you can only bankroll 2 spins, and somebody walks in there, say you have 100 grand to bankroll your roulette wheel, this is why a casino might have bet limits on certain games, because they've done the math and they say, okay, well, if this wheel spins 10,000 times or 1,000,000 times, there is a 99% chance at some point somebody's going to go on this type of win streak, or multiple people are. And we need to make sure we can survive that drawdown. And so they have bet limits. So if you started a casino and you only had 100 grand to bankroll the, pay out the winners, you might not let people spin 100 grand on the roulette wheel, because all it takes is one person to come in and spin, you lose. And you'd say, I thought I would make money with this roulette wheel. Yeah, but your bet sizes are all messed up. And so the same thing with trading, right? You can have this extreme edge, but you need to size appropriately, because even in the extreme edge, you're going to run into losses. And sometimes if you take enough trades, if you take 100 trades, 500 trades, 1,000 trades, eventually you'll run into 2, 3, 4, 5 losses in a row. And that can either be a blown up account, which shouldn't be, because you can do the math, and I have videos breaking down the math here. Or it can be a 5% loss, a really bad kind of weak series of trades, no winners. But here's the thing, and I talked about some members' equity curves in a recent video. It's pinned on my X right now. And you see a bunch of equity curves that I went over that have been looking like this, right? And this means that as they take more and more trades, price is kind of going into one direction. And you might see some lulls, little pullbacks. That's 4-hour win, 1-hour loss. 1-hour win, 1-hour loss. 1-hour win, 1-hour loss. 4-hour win, 1-hour loss. 5-hour win, 2 loss. 2-hour win, 1 loss. That's what this is showing. But what you realize after a while is, oh, this is an edge that isn't losing and has almost no drawdown. And it doesn't, and by the time, you've taken 500 trades and you run in to your 5-trade loss streak, you might get one of those. But at that point, it's a question I get, because I feel like most people haven't experienced winning as a trader, like really just winning, like insane winning, win streaks, massive trades, winning for weeks, months, years on end. And so people ask me, how do you deal with a 4-trade loss streak? Do you stop trading for the week, or, how do you navigate the emotions? There's no emotions. I don't care. I'm here. I'll just, if we draw out my equity curve in my career, I'm up here in my career, right? This is like, and most of my weeks and my months and my days, and it's kind of like, how do you deal with this? Do you stop trading? It's like, no, I just keep trading. Because I think what most people are experiencing as new traders is they haven't figured any of it out, right? So their equity curve, where they're at in their career, is like here, right? And they're like, how do you deal with this loss streak? And, you had a good week back here, or a good day, or you risked a bunch on this trade and it went straight up, but then you lost it all in this trade. It's like, well, you're not even playing the right game. You probably, if you have an edge, you're not sized around it properly. And, if you're missized, then it completely screws with your ability to manage your trades and your emotions and whatever. And like, for example, one of the reasons I like hedging, and for me, hedging is just setting up a trade at a really clean level. That's counter to my broader thesis. I just look at it as individual trades. So for example, if I have these swing longs running for higher on Doge, well, I can look at this chart and I know how price moves. So it doesn't matter if I have a higher time frame bullish idea. I know price probably isn't going to go straight there tomorrow, and we're going to build all this internal structure. And what if I put on this short as a separate trade? It has nothing to do with this long. This long runs, I print on this short, I put on this long, I put on this short. And instead of me sitting and staring at my P&L on this trade going up and down, should I close it? Should I open it? I'm actually just positioning myself to win, because I'm taking a bunch of great trades. And I know that I'm going to have big pullbacks on this swing long, but instead of just closing it every pump, I understand I can just take longs, I can take shorts, and I can trade this internal stuff. And when this big pullback happens, I have this swing long from down here. It doesn't really have the same emotional impact when you're just printing a short, and then you print a long, and then you print a short, and yeah, maybe you take a stop loss, and then you're printing another long, and this whole trade's still running. And that's how I like to trade, because it puts me in a position to win both practically, make money, and emotionally, no matter what. I'm not just sitting there staring at one trade, one bias all day, every day, right? I'm taking a bunch of trades. So anyways, the whole idea of this trade is that we hold up this wave one, and I still like the idea of, generally speaking, and I can clean up this chart a lot here. We don't need all the Elliott wave stuff on here. I still like the idea, generally speaking, of holding up all of this and pushing higher. You know, we've kind of run all of these lows. And if you watch my earlier video from back here, I did talk about this just as a nice thing, maybe even front running the SR flip. But yeah, we want to see price move away from here. There's one kind of unfortunate idea, which is just that the invalidation for this long for me is price coming down here from an Elliott wave perspective. But it's just hard not to say, like, holy smokes, if price just does this, then it's kind of a perfect SR flip of this level, perfect trending at confluence, and it's the GP of the move. I mean, just if I removed all Elliott wave ideas, that is kind of a nice idea. But on the flip side, I'm in the long because of the Elliott wave idea. And if we do this, then I don't get front run if that doesn't come. I mean, this does kind of look like a nice idea. So I'm going to kind of be, I've got my hard invalidation for this idea running right below this green line here. So in theory, if this happens, and we come right below my invalidation, right into the 618, into this uptrend, then I can still be in the trade. But otherwise I have to cut. All right, let me just look through a few comments here. There's a lot. So Emmy says, for some reason I got stopped. Maybe a buy bit error. Is good to enter into the Doge trade or don't chase it? That's a silly question. It's a silly question because, okay, is this Emmy from the Discord? Same Emmy from the Discord? Here's the reason it's a silly question is, what would my answer be? What would it have anything to do with your question? If you're saying, is it good to enter into the Doge trade? What does good mean? What does good mean? Because somebody will ask a question like, is it safe? Is it safe to enter this trade? What is safe? Is it safe to spin the roulette wheel? If price goes down, then you'll lose the trade. The safety of the trade does not come from me being able to say, yes, price will come up higher and you'll be safe. The safety comes from your ability to manage your risk in the trade. So me telling you it's good to enter the trade, what does that mean? If somebody says it's good to long here, I would say, why? They explain the idea. I like the idea. Where's the invalidation? And then I size my trade accordingly. So let's just pretend I'm not in a long here. I'm sitting here on the chart. I'm not in a long at all. And I'm trying to ask myself, okay, is there a reasonable idea to be in the long? Let's just say the bottom's in. Let's say that's the idea. Well, how can I start thinking about structuring a trade here? I could say, well, do I want to wait for some kind of pullback? And maybe I would long that. And I could set that trade up here. And I could do that same setup that I kind of just talked about, but on a lower time frame. Come run all these lows. Okay, that could be an idea. And I kind of get similar ratio on my risk reward here. It's like 7-1. So 7-1 are my odds if I'm gonna, about, or what I'll get paid out if I hold this as a swing trade. Then I could say, well, what if I just enter here and put my invalidation under this low, size for that anyways. Okay, I get 6.3-1. So I'm kind of losing 1R, but I'm in the trade in more scenarios. Do you understand what I'm saying? You can structure the trade based on if you think it is good to be in this trade here through any of these scenarios. And if you want to put your invalidation as the hard invalidation, then it's like 4-1 that the idea works. So you get 4-1, and then you decide, well, what am I going to risk? And the standard risk that kind of holds up, well, I wouldn't say it holds up I'd say the average system would maybe be the way to put it, is 1% per trade. And my view on risk is that you shouldn't be risking anything if you're a new trader and you don't have an edge. But maybe you take 30 sample trades and you say, oh, I took 30 trades, I won 16, I lost 15, I made 2 times as much as I lost on my winners. I could extrapolate that and say, like, I'm comfortable risking X amount mathematically per trade. Maybe that's 0.5%, 1%. The lower is the better, right? The less trading experience you have. The more data and experience you have, the more you understand your edge. Some edges can survive higher risk, right? And some require lower risk. There are literally traders who make money and they win a trade every 7 years. And they just bet really small on really unlikely things. And, I've talked about the GOAT trader. The GOAT, he's like a GOAT herder. That's why it's called the GOAT trader. His doomsday fund. And he basically just takes really small bets every day on the market, a black swan nuke event happening. And he'll lose trades every day for 7 years. And then when the black swan comes, he made like hundreds of millions of dollars, or maybe it was billions, I forget. But, and so his fund is like a hedge against that. But he knows he's going to lose so many trades to get to his winners, but his winners will be so huge, he has to bet really small amounts every day. And he basically just figured out the market misprices black swans, and he makes really small bets every day that there's going to be some tragic event. And eventually, like, COVID happened and he made a bunch of money. But I think he'd lost every year for 7 years before that. But a very small amount. So, yeah, when we're talking about is it safe, is it good, I don't know what's going to happen, right? It's just a trade setup. And your safety comes from your sizing. I don't even like to talk about it this way. Somebody says that I might have skipped some stuff here. Wait, what is this? Why did someone say, Georgie, shut up, man? I didn't see what he said. I don't know. Okay, so somebody says, what are some key factors to identify Pico bottoms and tops? I'm not even going to say that or answer that, because I don't actually think about entering the Pico bottom and top. I think about entering great trades, and they just happen to often be the Pico bottom and top. I'm not trying to enter the Pico bottom and top. And I really just want to stress the fact, like this is where I can confidently say what I'm doing is nothing that most of you will ever do, and to the point where you could talk to traders, and I have friends who are really experienced traders, made hundreds of millions of dollars in their career, and they have 20, 25 plus years experience. They will say their opinion would be that doing, so let's just say price does this, whatever, some random thing, even if you took losses, shorting this, longing this, shorting this, longing this, and let's say you lose a trade here, shorting this, longing this, and having all of this planned out ahead of time, and those are the only trades you executed, is impossible. It's impossible. You might catch the bottom every once in a while, once in a rare blue moon. There's actually a lot of traders who would, and people who extract money from the markets, that would actually say that the market is completely random. There is no predictable pattern in any kind of way. In that, if I go through every candle here, just, we can actually pull every candle here. This would be their opinion. And in some ways, many people believe this, that, okay, so here across this little section of the chart, there is 2,700 bars, 2,700 candles, that my ability to trade the Pico bottom, top, or candle is random. It's a 1 in 2,700 chance. It's just, if I do it, it's maybe I'm exaggerating their view a little bit, but more or less, they would just say that any kind of edge you think you could extract from that would be anything approximating shorting the top or longing the bottom. That's why people say don't try to pick tops or bottoms. You can't pick tops or bottoms. That's like conventional wisdom. That if I short the Pico top here on Doge, or I long this Pico bottom candle, and I do it multiple times in a row, that I just did a random event, a 1 in 2,700 chance, and it just got lucky and I did it. And if I do it again, then I did a 1 in 2,700 chance twice in a row. And the fact that I drew this out, go back up here. The fact that we got to go here. The fact that I drew it all out beforehand, days ahead of it time, is considered by most people to do anything like that somewhat consistently. I mean, not even somewhat consistently, just at all. There's a lot of people who just say it's literally a random thing. I just got lucky. I'm just a lucky chart ape. And, the fact that I longed this on Doge, and I longed this, and I'm not saying I haven't lost trades. It's ridiculous to even think anyone's not going to lose trades. But this doesn't have to be pushing the boundaries of reality or what's considered possible for me not to have ever lost a trade, or for me to have never lost a trade. So here's my point. Most of you will never do this, and you do not have to be a profitable trader. Okay, so I'm not here to say that, hey, you should be trying to long every Pico bottom and short every Pico top. And the example I give of all these other traders is these are really successful traders, really smart traders who have spent their whole life trading, and you don't think that they've tried to figure out a way to find the top and the bottom, and they've come away thinking, hey, I don't even think that's possible. Maybe that is, but it's like, I give up. There's got to be another way to trade. And so the way I approach it, and I've tried to explain this, I don't look for the top or the bottom. I look for great trades. And if they happen to be the top or the bottom, then fine. But I'm not trying to short the top. I'll short very specific things. And if they happen to be the top, they're the top. If they're not, that's fine. But what you can really get, where you get lost, I think, as a trader, the big rabbit hole, especially if you're seeing someone like me, is you start trying to figure out how to find the top and the bottom, and you're not looking at great setups anymore. And so, when you're trying to find the top and the bottom on every trade, you just start shorting every pump. Every pump's a short. Every dump is a long. And you're not even looking at any structure or trade setups, and you just find yourself getting destroyed. Whereas I'm looking at really clean structure. And so I literally longed on within 5 seconds of the bottom here. So, but here I didn't short the absolute Pico top. I mean, I shorted within a fraction of a percent, but I shorted in here. And validation up higher. But anyways, so just to say, it shouldn't necessarily be your goal, and it shouldn't be a surprise to you that I can't answer a question. This is how you find the top or the bottom of major moves. But I'm demonstratively doing it to the point of absurdity constantly. And so, hey, people think I'm bragging or something. I'm not bragging. I mean, but I'm just telling you that my edge is so extreme. It's insane. It's, I was doing a month end review a few days ago, and I just was curious. And if I went back to September of 2023 and added up every loss I've taken trading, so remove all my wins, which I've had some insane trades, I'd be a profitable trader just if I put this month alone against every loss I've taken for the last 2 years. If I took in no other trades except for the losses I've taken for 2 years and then just my winning trades this month, I'd be profitable. And so that is a pretty extreme edge. And that's why, when you're seeing members' testimonies, where you have some of these guys, whatever, they've shared their equity curves since they've joined, and even people saying like, oh, they're not using risk management. Like this guy posted, he's been here for a week. He's up $173,000 or 66%. There's lots of equity curves that got posted in here. I don't know in his case. I don't know exactly. I don't know if he took every trade I took and he did it with 2% risk or something. But this is actually what was happening this week, pretty much. So with risk management. So it's like, there's a reason that you have hundreds of testimonies in here and a bunch of equity curves that are completely turning around. People saying, guess when I joined the LATF? Joins the LATF. And that is an extreme edge. And it's not smoke and mirrors. It's not made up, because there's literally brand new traders who are just following along with what I'm doing using risk management, and they're literally outperforming 99.9% of profitable traders. Like putting you as a top trader in the world, 20% a year, 30% a year, that makes you one of the best traders in the world. And you have literally new traders in here outperforming them. And I don't care, you're not going to be able to do that if you don't go through all the educational materials and you don't, whatever. There's a whole process, obviously. You need to understand the concepts. You need to use risk management. But if you haven't done the math, even if you're making 30% a year, 40% a year, 50% a year, for some of you that might not sound like a lot, it's infinite money. If you start with $1,000 and you do that if you do that for 30 years, you start with $1,000. Go do the math on how much money you'll have, starting with $1,000. Start with $5,000. Do 5% a month, 6% a month, 7% a month, 8% a month. Do it. Put it in a calculator. I'm not going to do it here. And see where you're at in 10 years. You'll make hundreds of millions of dollars starting with no money with an edge like this. And you just have to, has to be done consistently over time, right? That's the main thing. You need time. You need time, patience, and discipline. And if you don't have those things, you're not going to be a trader. Because there's no edge. I have an extreme edge in the market. There's no edge that makes you rich in your first 3 days of trading, right? You can have a good 3 days, but if you're thinking you're going to make 10,000% a day, then you're detached from reality. And you don't understand that even if you're making 8% a month, with a $5,000 account, you'll be worth $100 million in short order. So, okay, let me go through a couple more comments here. Would I long Aster from here? I don't know. I don't. I don't really care that much about Aster, to be honest. I'll come back to that question in a second. I don't. I'm not going to read these. Sorry, I was just going to read through here. I thought there were questions for me. It's just people talking about something to do with exchanges, just chatting, helping each other. That's fine. Okay, if we go to I'll just answer this question quickly. Someone says, why Doge? Is the structure consistent with Elliott waves? I mean, everything in theory is consistent with it, but it takes a lot of work to build out a count. And I've had this count from back here. And so, I've been trading Doge. I did long this on Doge, and I have a swing long. I'm not even talking about all of my trades, right? I have a swing long from down here on Doge. I literally long, I could go back to show that in the Discord. I literally Pico bottom long this as well with a plan that I made back here for the 1-2. And I had a long here. I did want another pullback to there, but I didn't get one. But anyways, I have a nice count here, and it takes a lot of work, and price is following it perfectly. So I even got some shorts on Doge onto this move down. I got a Pico bottom long. And why, this is the thing. I'll just say it like this. I saw someone else say, why do you care about Doge so much? Well, I'm just trading it. I could care about something else, but it takes a lot of time and effort and work to trade something well. And so I can't trade everything like this every day. And so I'm making it so much money, it's insane. And so why wouldn't I just trade it until I'm trading something else? And I one thing is people, people will ask me I'll get 10 requests a day for different charts. What do you think of this? What do you think of this? I don't know. I don't think about it. I'm not trading it. I can't think about and trade every asset on every time frame. I'm interested in the things I'm trading, and I'm trading them for the reasons I'm interested in them. A little bit of circular reasoning there. So, I have these clean ideas and I'm paying attention to the chart and I have positions on long and short. I'm just going to trade Doge as a primary thing. And, I'm interested in Bitcoin as well. And I could talk a little bit about that. But just the reality is, Bitcoin's kind of a little bit boring compared to Doge right now. We're kind of around all-time highs. Might be interested in a long down here. I could go briefly into my thoughts on Bitcoin. I think it's kind of what is there really to say? There's a short idea I talked about in my last live stream. This is the all-time high move, right? So I had explained it was the Pico high on Bitcoin, by the way. But just explaining, we had an uptrend. I'd be interested in shorting a sweep of the high or a breakdown of this uptrend, something like this. Blah, blah, blah. And now we've broken down from there. And it's not that complicated, right? So let me go here. It's not that complicated and it's not that interesting right now. I guess I could even show, my view from this has just been a retest of this level. That was the other day when we're testing this top of this GP, looking for a move down to the downside. Obviously, this could be a short too. And that's where, if we go back to the current chart, that was the Pico top of locally of Bitcoin. We had the move up, pushed through, took the highs, broke down the downtrend test. And I'd be interested in maybe taking a counter hedge long off this SR flip if structure looks good there. And, look for a TP1 into something like this, back into my short entry. Otherwise, a rotation to the downside. I'll just cover, I'll cover Bitcoin really quick. Let's just put everything away. I talked about this in my last live stream, but basically I think there's really one idea to look at here, which was a push up. That could be a short setup. And there's not a lot of structure here. There's really only one level that's interesting, which is the retest of this horizontal for some bullish ideas. We could even retest it and then break it down with the lower high and a rotation back into these lows. I like that idea personally. I know whatever people will say you're a perma bear, whatever. I'm not really spending too much time on the count here on Bitcoin, but we could just, you can just visualize I said this in my last live stream. Why complicate this? It's either a range or it's not, right? It's we break out or we don't. Right now we're not. It looks kind of like a pretty big bearish rejection, frankly. And here's the thing. It's like people want to kind of dog you on everything on X, like about anything you say. It's like, I don't care. We break out, we don't. This is a short I would take. And people will say, this is insane, this is crazy. You think that Bitcoin's going to go back to 105? It's just structure for me. If it breaks out, then I'm not going to want to be short, right? But something like this, I think is completely reasonable. And if we go back to, I mean, let's go back to Doge. Let's just kind of fractally pull some of this price action over what we got going on here. Probably some similarities going on here. A three-wave move to the upside, something like this. And I'm interested in swing longs taking this low. I don't see any reason to overcomplicate things here with Bitcoin. And I don't really think there's, I mean, look at the structure here. I don't really think there's too many trades to take. Maybe a long off of a retest here. And maybe TP1 for a lower high, trail something for a weakness, hold for some of the bullish scenarios. Otherwise, this for me. And here's the thing, like this could be like a Pico top bottom idea, right? And people go, oh my gosh, how complicated is this really to trade? You just put on the trades and they either work or they don't. And it's so simple. The structure here is just so simple. You could sit here worrying about everything that price is doing every day, but you have highs, you have lows, you have a potential range, maybe one SR flip idea. If you start getting some bullish structure into something like this, you might look at something different. But I think at this moment on Bitcoin, it's quite boring, other than I think I probably lean towards a rotation to the lows of the range. But if we get a really nice bounce off here, probably some bullish ideas can play. And we could bounce from anywhere, but I mean, I think there's more interesting things to trade. Someone asked me about Aster earlier. I'll just respond. He asked if I would long it here. No. I mean, I haven't even looked at low time frames like that. If I was gonna long it, then I would set up something on the low time frames. We had this big wick. You know, I'd have to think about like what the structure here would actually be. We've already gotten some deep retracements. Like probably could have set up some trades off of that sweep. I mean, this looks kind of like, you know, you have a nice range. This does look kind of bullish, honestly. Just like I'd have to go into the low time frames, but this is, you have kind of rounded grinding structure starting to form. Price SR flipping really nicely here. Is that the perfect? Oh, this is here. Yeah, I mean, I wouldn't just long it here because it's without thinking about it, but it's like there is even on the 1 minute chart kind of bullish stuff starting to really happen that kind of looks breakouty, but this can also play. Yeah, I'd have to think about it a bit. I mean, I would scalp. I would probably have been getting, if I was watching the chart, I'd probably have been scalping some longs into here because this is you know, you could lock in TP1s. I want to think about this for a second. I mean, I'll just do it. Like, obviously, you can just see the amount of effort that I'm actually putting into it right now, which is minimal, and I'd really want to be paying attention. But I might set an alert here. Like, this could just break out. Like, you know, there's probably some longs here that Could maybe carry. I don't really like longing right into resistance here though. But like this all could have been longed. Yeah. I don't mind this at all. That was a nice. This is. Certainly went short this. Like maybe we can push up and take this high. I'm gonna cheat sheet this with it'd be like this kind of setup. This is the 4-hour chart, but you know, it would just be on a really low time frame. I'm just overlaying the Doge 4-hour chart here. Yeah. So it'd be something like this could be interesting. You know, get a big pump. And then run something like this. Setups like this are kind of hard because you can't actually wait for this low to get taken, but it does get taken in some cases. Like this is a 5% distance to stop, so if you wanted to just run it as like super wide invalidation with under this low, you have to look something like this, probably. You could try this, but it probably increases your odds of getting it stop hunted a little bit. Yeah. But all this locally here is quite bullish, this like rounded grinding structure for an impulse. But these impulses can kind of fake out. Like I'm using the example of Doge here. And you can get that nice retest of the support there. Like this would look okay. Come and run all these highs. Fake out the pump one time. And then get a nice local rejection into this. I'll send an alert there. I might trade something like that. I could also just miss the whole thing because this looks bullish, right? This requires like a complete fake out, but that would be how I would look to like long support. Always using risk management. There's no guarantees in this particular structure. I could have longed this sweep as well of a local low, but that's already played out, right? And the bullish scenario, I mean, this could just keep pumping, obviously. Probably a downtrend here to kind of play around with the pump idea. But anyways, that's Aster. I don't really care that much. I'm not like super like, oh, Aster's I gotta have longs on Aster. If I get some clean setups, I would take them. But I'm just frankly making so much money on the things I'm trading. They kind of have my attention. All right. So like people asking, would you long Aster from here, which I just answered. It's just you have to set up a trade, right? I'm a technical trader, so I set up trades based on technical price structure with invalidation and whatever. It's so you have to think about what the trade is. It's kind of like me taking a trade is not because I think price will go up or down. For example, if I'm shorting Doge up here, and I don't have all the confluences on the chart where I took this Pico top short, I had some really clean ideas to confluent here, but I'm not shorting here even because I think price will go down. I'm shorting here because I think it's a pretty strong idea. Let's just say I don't know the exact percentage. Let's say if it's a 50-50 chance it goes down. Well, I get paid, let's even call this 7-to-1 on my risk. I get paid 6-to-1, 7-to-1, 5-to-1. I get paid 6 times more on the times it works than I do if it loses. So even if it's a 50-50 chance, I'm thinking about that. Even if it's a 30% chance, right? So I think I don't even have to have the exact odds. I just have to know if it's higher. And again, we're talking about probabilities, and you can make arguments that every moment in the market is different. It has to be above a certain percentage chance, but that's much lower than even 50-50 for me to take the trade and make money if I do it 1,000 times, right? So, anyways, when we're talking about Aster, is it a good long? Well, like, let's just say, is this a good long? Well, it could be. I mean, if you start thinking like how often really are we just pumping straight up out of here, and out through all the resistance back up to these highs, let's say, and we just get a really strong move, and you could kind of play like a trailed position as well, and kind of gets a little bit dynamic at that point. But you're getting paid 11-to-1, so if there's like a 10% chance that happens, then you could maybe justify the trade, and maybe you don't risk 1%, maybe you risk 0.2% on this idea. You put on a little bit of risk. You say, you know what, I'm going to play a little amount of risk for this really bullish scenario, and I'll lose 0.2% or say 0.2R off of this if it doesn't work, and then maybe I'll try that set up as a separate trade. You could do things like that, but like the thing is, if you don't understand all these things about trading, then you shouldn't be trading. It's kind of like, it's like, you are sitting down to play world champions in chess, and you don't know any of the rules, and that's not going to end very well. And what you need to realize when you're trading in the markets and you're putting your money at risk, you are doing it against professionals. The market is full of professionals taking money from people like you. And if you don't, so if you're a boxer, this is the analogy I use, you are a would-be boxer, instead of going to the gym and doing cardio and hitting the bag and working with a coach and training before you get in, you are walking straight into a fight with the world champion, with professional fighters with 20 years experience, and you've never thrown a punch in your life because you don't understand, like, entering the market with real money, that's being a pro, right? That's what pros do. And pros are there to take money from other pros even, right? And they're there to take money from amateurs, and they're there to take money from complete idiots that are stepping into the ring with no experience. You need to give yourself an honest assessment. Am I a professional? Am I ready to trade? It's not just me, not just trade against Lucky, someone like him, trade against other people like him. A market full of people like him trying to take my money. Because that's what, for me to win a trade, someone has to lose money, right? And so you just have to be honest with yourself. Are you ready to start throwing money into the market as against professional traders? And if the answer is no, then you shouldn't do it. You should be in the gym, right? You should be training, because here's the thing. We will take your money. We will. There's no way that you might win a trade here or there, but if you're not a professional, the professionals are going to win. Yes, you might have every once in a while some brand new guy who's never fought before throw a random punch and knock out a pro, right? That's probably like spinning their arms around in a windmill, and it just hits them just right on the jaw. But generally speaking, if you just put 100 pros into this chart against 10,000 new inexperienced traders, who do you think is going to end up with all the money in the end? After a month, the pros. And there's just no way around it. And you are the sucker if you're in here trading with no experience and no understanding of concepts on how to structure a trade. So anyway, just being blunt with you, I mean, I don't know how else to say it. And that applies to every asset. Um, all right. Which is the minimum risk reward for what you enter a trade? It doesn't matter. I mean, you could structure a trade based on 0.2 R, right? Like you could have a really high win rate system that has all your trades structured like this. It's not the right question. It's not the right question because there's no one way to trade. All your trades could look like this, and you could win all of them. I mean, or win 90% of them or 95% of them, and you make your money that way. And every 10 trades you lose, and that's takes out 8 of your wins, but you won 10 to get there or something like that. But we're kind of I'll put it this way, like there's certain types of traders. Some traders, and this is okay, they trade essentially one setup. Like they basically have, and maybe if you're a swing trader, this means like you might get like a few trades a year, and it's like, oh, if those 3 trades don't work, you lose 3 trades, and that's it. But I mean, I would say that's more like a beginner swing trader. You should have a bunch of assets you're trading if you're doing that as a professional swing trader, unless you have billions of dollars. But but I don't just trade one setup. The way I put it is I have so many tools in my belt. I trade high time frames, low time frames, medium time frames. I trade different types of structures and different types of environments, and I just have so many ways to put on a trade anywhere because I have a lot of experience, and I think I have a pretty dynamic understanding of the market. A lot of people I mean, my trades have rules, I would say, but they're complicated, right? They're like just look at Elliott Wave and you'll kind of understand. It's sort of like that. It's like if this, then that, but this, except if that, unless this is happening, and then I could do this, but I don't want to see this, and then this, and then this. And I don't share all of my trades that way. I use all of these things to maybe inform some of my thoughts, but then I try to distill everything down into simple structures. And I think maybe that's something that I've done successfully in the LITF, maybe more so than I even thought I might be able to, is I've found really kind of shorthand, simple ways to distill kind of probably more complicated concepts into simpler structures. But anyways, the point is, some trades I would take because they're 50R, and I don't think they're that likely, but I think they're a lot better than 50R. And some trades I would take that are 2R, but for different reasons. But it's really about the trade. It's not really about the risk reward so much. It is, but some trades can justify being taken because of their risk reward, and some trades are worth taking even if their risk reward is low. Also, I've been trading for over a decade. Someone says, how long on average would you say it takes to become a pro, or how many hours looking at charts, executing setups? I don't know if there's an average, and I guess it depends how you define pro, but I'll say this, most people just never become pros, so there's no guarantee. Like, we were having a conversation in the Discord yesterday, and people will say things like, oh, it's like they'll kind of try to take this wandering path towards success as a trader. It's like, I just want to make it on my own way, and it's like I'll figure it out myself and whatever. It's like, you're not a movie or a main character from a movie. You probably are going to fail, and there's no guarantee that many smart people have tried for many years and never became profitable. the market's not so easy to crack. And like people who I personally think it's just people with, it's actually a character defect that they say. I'm not talking about joining my Discord or learning from me. I'm just talking about they think they just want to sit here and like take shitty trades and just say, "Oh, I'm learning. That's the price of my tuition. Another liquidation. Oop, blew up my account. That's my cost of my tuition. Oh, well, ooh, I'm in this trade. I'm going to add to it. Oh, I blew up again. That's the cost of my tuition." It's like that you're never going to succeed. You need to you need to spend some serious time and effort learning the fundamentals of trading. Like another analogy I use, if you want to become a physicist, you know, go take physics classes, learn from 100 years of modern physics, and build off of that, right? Don't start on your own trying to invent your own physics from scratch, right? Because you're just going to look like an idiot and you're going to get nowhere. And you're not the main character. You're not going to reinvent physics from scratch by yourself. Go read a physics textbook and go take a physics class. And the same way with trading, you're not going to figure it all out on your own. Some things only you can learn, right? On your own. But you have to have the experience. But don't try to solve the market on your own. That's just dumb. And people, like, everyone should have their own style in a way. Like, trading is individualized, but certain concepts just have to be utilized. And don't think that you have to create your own trading system. You know what I'm saying? Like, you should do things that work and you should make money. And like, life is hard. You don't have much time and there's no guarantee of success. Take the advantages where you can get them and try to win, right? And try to be an outlier that succeeds at this, because most people won't. Most people here won't. Most people that spend years won't. And take it seriously, or you won't succeed. There's a reason that most people don't succeed in trading, and there's a reason that the few that do make insane amounts of money. And if it was possible that everyone could, then everyone would do it. Lots of people try, but not many people succeed. But one thing is, hours do count. I mean, I would just say that like most of your hours as a new trader should be spent essentially paper trading. But there's a big difference between somebody who says, "I've been trading for 2 years," and it's like, "Oh, what do you do?" It's like, "Well, 2 years ago I bought Bitcoin, or I bought Google stock," and that's their one trade, and they've had that. But it's like, and so they've really put on like one trade or 5 trades in their life. And somebody who is paper trading, they're trading a bunch of assets, a bunch of time frames, and they have thousands of trades on, right, in their experience. And so, yeah, if you have a little bit more time or effort, and most people work full time, they don't have time to do that, at least put some time aside. Like something like the Discord, it's the LATF, Lucky Apes trading floor. It's just meant to accelerate that process, right? Because you basically have a bunch of the educational material, but you just have me analyzing the market every day and explaining my thought process, trading a bunch of time frames, and you're kind of exposed to kind of more complex ideas, a bunch of trade setups, and them explained really quickly, right? And you don't have to necessarily be doing all of that work yourself to kind of be noticing this, looking for this, taking this trade setup. But you still have to be putting in some effort, right? And I would just say put in concerted effort. If you have 2 hours a week, make it count. And if you have 2 hours a week, don't think you're going to succeed taking the wandering path, where you're just sort of like, every week for 2 hours I come and I long Aster, and your chart is blank, or it has like a moving average on it or something, and you're just and you're whiffing your net worth into random trades. You're going nowhere doing that. So but yeah, the average let's say it like this. Not everyone who trades for 2 to 3 years becomes profitable, but I think a pretty wide accepted average for someone to become profitable is 2 to 3 years. So it's kind of like most people who become profitable take 2 to 3 years. Not everyone that puts 2 to 3 years becomes profitable. That's the best way to say it. Yeah, and a lot of it isn't just technical, it's psychological, right? But there's going to be people who accomplish. I mean, there have been people who have joined the Discord and been consistently profitable after 1 month, and they're 5, 6, 7, 8 months of just an equity curve that looks like this. And I'm not saying that's going to happen for everybody that joins the Discord, but they basically watched the stuff, they applied the stuff, and they probably have some. In some cases, they maybe don't have a lot of emotional baggage. Some people might, but one of the things that can happen to you as a trader is if you've been trading really poorly for years and getting absolutely destroyed, you have a lot of trauma, a lot of bad experiences, and you're just constantly afraid to get stopped out. This is going to lose, or as soon as I enter, I always or if I don't close my trade now, then it's going to reverse on me. And you're just bringing all your baggage into your trading, and you just can't. It takes some time to get through that because you need to make some changes, and you're really just trading based on pure emotion, and a lot of that emotion comes from years of bad experiences. And so I'd say probably, in theory, there's some advantage to members that join with less emotional baggage because. There are people who they'll have all Pico top and bottom trading plans, and all they had to do is put on the trade, and that was their plan that they've been talked about. I'm taking this trade, but they're just constantly finding themselves doing things like this happened. I just closed my trade at entry, and then the pump happened. It's like, well, why'd you do that? That just as a retest. That's not validation. It's like I got scared, or it was coming. I thought, you know what, this is going to stop me out, so I shorted it, and then price went up. And things like that happen, right? Where you just realize, whoa, no matter what my trading plan is and what price does, I can't execute it. I can't do it. I'm like, okay, I am going to long this and wait. This happens. You don't long it, and then price goes to your target. Or I'm going to long this and leave the trade on. You long it, you close at break even. You long it, you close it, you short, and then price goes up. You short it, and price goes up. And then you'll say, okay, no matter what, I'm going to do it the next time. Same thing, same thing, same thing. And then the one time you do it, it doesn't work. And you say, okay, I'm meant to cut my trade here. And you say, you know what? Last time I did anything, it just went up. I'm not going to cut it. And then it goes straight down and you lose. And even though this is your setup, that you're meant to be trading 10 times in a row, and you would have made tons of money, as an individual, you just experience that you cannot put on the trade. You can't execute it. Just something is happening, somewhere in here over and over again. And no matter what you say you're going to do, you do the opposite. And that's something that's a real thing that people have to overcome. And I suggest you do it by trading really small amounts. A lot of your emotion is going to come from just trading too much size or just paper trading. Do I have a limit for the number of charts I look at? I feel like that's what someone asked. I feel like I'm often missing out because of too many charts. Thank you for all the guidance. Not really. I mean, I have a lot of charts on high time frames. I have alerts set, and that includes the stock market, that includes crypto. But, you're not going to be scalping the 5-second chart on 20 different assets, right? Like, you have high time frame levels of interest. The one thing I will say is I used to trade. I used to probably trade more time frames on more assets at once in the Discord, where I would say, hey, I have 7 longs I'm taking today across these 7 assets. These are all the levels. I have all my trading screens opened up, all the trades pre-ready to go. I'm gonna literally market into all of them if they all hit at the same time. and I'm going to watch the market, I'm going to watch order flow, and I'm also updating all of the trades as I do it. And I would just say that like my capacity is probably higher than most people's. I have probably as close to zero lag time in terms of like seeing what I want and making a decision as I could possibly have. Whereas a lot of people aren't going to have that capacity. They're going to look at the trade. They're going to be, oh no, should I take it? It doesn't look, oh. Then they miss the whole trade. And then they had 5 other screens open, and then they're trying to open another long here, and then price is going down, and they're taking a massive loss and whatever. So I would just say the best thing to do for you is what works for you and operate within your limits, right? So, you know, like don't ask me how many assets you should trade at the same time, because it's the answer is going to be different, right? I wouldn't say like, oh, you should trade 5 assets. That's what works for me. Trade one, and if you can't trade one, like I would recommend this. First off, be aware of all your high time frame structure. Start on the high time frames. If you whatever the analysis you use, I'm not even going to promote a certain type of analysis. I'm just going to say start on the high time frames and be aware of all the high time frame structure. If you're going to and plan out your trades on high time frames. Like not every trade is a high time frame trade, but make sure you're aware of the high time frame ideas. And at the very least, you have alerts set, you're ready to trade those, and you might take other trades, but that's where you start. And those trades are nice because they usually give you a little bit of time, and there's a little bit more leeway for how those could be structured, and you don't have to, you put them on and you'll find out in a day or two if they're going to work. Then from there, you can start getting into your lower time frame structures, medium time frame, and then you might, and this is, again, I'd say for a new trader, this is paper trading. And then if that's going well, so you're consistently putting on your trades you need to on the high time frame, you're consistently doing it on the medium time frame, that's not overwhelming you, you can manage them separately, then add the lower time frame. And if you can consistently put on lower time frame trades, higher time frame trades, medium time frame trades. For example, like I mentioned, I've taken a ton of trades just here on Doge, but I've also taken a bunch of trades in here. I still have, from the summer, a swing long running on Doge. I'm managing all of this separately on different time frames on just Doge. And in the meantime, I was trading tons of just absolutely diabolically beautiful trades on ETH in here, and on Bitcoin, and on other assets, on multiple time frames, and I'm writing basically a book on every trade I take in the Discord. So, that's within the limits of my capacity, but might not be within the limits of yours. And I also work like 16 hours a day. And I know what I want, right? Like I'm not trying to solve the market, right? I'm not trying to figure anything out like, why would price do this? Or what does this mean? I already know what I want to do. I'm just executing my my edge. And that's I guess an interesting topic to kind of segue down just briefly, is at some point when you have something that's working and you're doing well, people always say like, oh, you should try using this or try using that. It's like, I'm not interested really so much because my edge is so extreme. My only job is to execute it. In a way, it gets kind of boring because my job isn't to like, really figure out like, oh, what if I do like, I test this new theory, or like sometimes people ask me to test their random theories. It's like, could you check if like there's any correlation? But it's like, no, you check. I have work to do. I'm executing my edge, right? If you have a theory about how something that the market could be, then you spend hundreds of hours going back and checking the market and then forward testing it, trading it, seeing if you can execute an edge for years and years and years, and then come and tell me if it's a good way to trade. So anyways, I would just say, even this would be for like some of the members in the Discord who have posted they're doing super well, their equity curve's going straight up, they're making lots of money. Your job is not to get better and better and better. At some point, there is no better. I'm not saying that you're perfect. I'm saying keep doing what you're doing if it's working, and you're going to make millions and millions and millions of dollars. And your only job is to keep doing what you're doing. And so your whole life becomes around sustainability, execution, and it's not about figuring things out, right? Yeah, so kind of some of these questions are too much to answer, and I do have to go soon. But someone's like saying, how do you choose invalidations? Do you have set rules, or is it more discretionary depending on the context? It's discretionary. Like, invalidation's a really tough thing, right? Because I talk about this a lot. Like, there's different levels to think about it on. And if you're a new trader, the best way to think about invalidation is what tight and wide and small, right? Because invalidation really has nothing to do. Sorry, I got distracted by something. Wide and small, because invalidation is like there's an emotional component to it. But how many times? I don't even want to say this on a live stream, really. I don't know. Let's just say this. Like, my edge is extreme as is, but it's actually way bigger. It's way bigger. But there's a size limitation to it. So I kind of structure trades differently. But it's like, how many times when I enter, this was my entry. This is just, I don't want to send you guys down a rabbit hole that you shouldn't try to go down, but like, these are my entries. Do I really need to invalidate my trades like this? You know what I'm saying? So invalidation has nothing to do with where price goes. You can invalidate a trade based on the extreme risk reward of your precision as a trader, right? And that's just not something I would ever recommend somebody, people really chasing at some point at certain points in their career, but yeah, I'm not even gonna show it, but I mean, I have I show some of the trades I have on. They're just, so like, let's put it this way. Let's just say I'm gonna create a really simple example. Let's just say that this is your short setup, right? And this looks pretty clean. You have this, you have like a 3.5 hour short. This would be a perfectly reasonable way to trade this, I think, and probably something like this for most traders. But let's just say that you're going to take this trade 1,000 times, and you've noticed that out of the 1,000 times that this trade presents itself, some percentage of the moves are this, 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 and this. And you've found a lot of noise in your invalidation. And you oftentimes look at the tick chart and the low time frames, and you've really found that you are better off to lose this trade 3 times. But again, you have to, I mean, this is an extreme example just because we're on the low time frames, and make it an 18-hour or 25-hour trade or an 18-hour trade, then you are, this is like, I don't even want to talk about some of this stuff because I almost want to delete the live stream if I do, but then having it be a 3-hour trade. It's better to be a 25-hour trade because you are winning it. even if you lose it 3 times, for the time you win it, it's 25R. And so you make 22R off of this setup, and you were trading it as like a 40% win rate, 3R setup. And, you know, I've said this before, but I think it's easier to find 10R plus trades than it is to find 3R trades. The market's too clean, but you can have an edge. That's the point. You can have an edge trading things as 3R. And this is where sizing comes into play, because just because you're going to trade something in terms of the risk reward doesn't mean it has to be a 2% loss on your account, right? Because you can be sized for this, but your actual hard invalid or your soft invalidation can be price just doesn't reject and you just cut it. And then you maybe try to play this scenario as a separate setup. But oftentimes you're going to find setups that you can play this way. But this takes a lot of experience, a lot of understanding, and there's nothing wrong with trading it wider. But this has so much to do with sizing. Like, you can get extreme risk reward on your trades with pretty high. I'll just put it this way. There's a reason that I've said this a couple times over the years, but like, people ask like, oh, you know what? I'm just saying, where are my entries? When you look at I just entered, how often is it actually just the actual Pico bottom? How often is it the Pico top? Like, you can kind of do eventually, after you see like a year of setups every day. Like, I entered Aster here at the actual Pico bottom of this move within like a second, and price had just gone straight down 20%. I'm just saying that, you know, so when it comes to invalidation, don't think about invalidation as anything to do with the direction of your trade, because you don't know what direction price is going to go, right? You can structure trades different ways. So, you know, you can basically have a high time frame idea and then get into the microstructure to position yourself based on microstructure if you want. I mean, for example, I'll just say, I mean, I could show the trade. Maybe I will, but like, I have a long from this morning, and it is this. I mean, it's just a Pico bottom long on Doge, right? And it's probably it's probably running at 6R right now, I think 6R maybe, but I'm gonna hold it, and it might print me, you know, 25, 30R, 40R, but I'm risking a small amount, right? That's the main thing. So I'm subdividing up my trades into Pico maximum risk reward in very specific circumstances. Not every trade is taken this way. But I'm subdividing my risk. So that's kind of more advanced, I think. Because an invalidation has nothing to do with, it is true that this is the hard invalidation for the Doge setup. I would agree to that. I mean, that's how I would structure the trade. It's perfectly reasonable. But if you have the ability to navigate the market in all of this really consistently and understand things that are happening here, that you can make split-second decisions, do you really need to size this way? No, but that kind of applies to me in a way that it doesn't apply to anyone else. But I also would size really small risk here. So I'm really keeping my risk super minimal in a position like that. But not every trade is traded that way. Some positions just call for wider stops, and some positions you aren't microing the entries. So, but I don't want to send people down the rabbit hole of trying to trade setups that look like that, because it's so far down the road in your potential career that you don't need to worry about that. Right now you need to worry about like just getting into reasonable trade setups with reasonable risk, and you can make insane money, right? Just trading like this setup on Doge, the short setup, this long setup, the way I traded it, this short setup, this is extreme edge. Traded super wide, and there's nothing. And you know, the people that are showing their equity curves going like this, they're trading setups like this. There's an extreme edge in here. It's so extreme that you don't even need to really actually be exploiting that edge to its maximum amount, and it still produces an edge. So I'd focus on, yeah, wide and yeah. I don't think this is really a lucky live curse, like the price is going sideways. I mean, I think right now Doge looks really bullish. I wouldn't really expect it to have pumped during this live stream, but you know, if this breaks out, it could look really good. I think we still have all this to get through and whatever, but you know, but yeah, and you can also de-risk trades and widen up your invalidation too. That's another way to play it. Here's the thing. There's so many concepts that it's just like you have to understand before you. It's just too much for me to explain. Like so people are asking. I've broken it down a lot. I've explained this. I've written threads about it. Whatever. You're not going to have answers to every question on a live stream. But people are asking, how does my Doge thesis match my Bitcoin thesis? How could I have this something like this happen on Bitcoin and something like that, the bullish thesis play out on Doge? Well, one, it actually does happen sometimes. It's kind of rare, but you know, there's times where one asset is more bullish than the other. Like Aster is kind of essentially disconnected from Doge, or sorry, from Bitcoin. But the other is, I'm not expecting it to. I'm not trying to marry every thesis on every time frame of every trade. I'm just taking separate trading. If I got this on Bitcoin, I would long it, right? I'm assuming that if this happens on Bitcoin, then that could be more correlated with what happens on Doge. But yeah, I'm just trading key structures and levels. And I find for myself that instead of saying, well, because you get into this really kind of backwards way of thinking about trading and the markets and structure, where you say you have this long idea on Doge. Okay, so you're long on Doge and you start thinking, well, if this Doge idea plays out, then that means Bitcoin's going to go up to 150K. And so I'm going to long Bitcoin here in the middle of nowhere. And then that means ETH is going to bounce from nowhere here. And so I'm long ETH and I'm long this. And it's like, well, why not just trade? But then all of a sudden, Doge does this. And Bitcoin does this. And maybe we weren't even long Doge anymore. Bitcoin does this. Doge has a random pump through this trend line. And Doge plays out this thesis, which is my thesis, by the way. We come down to 18 cents. And you just screwed up everything here. And maybe you long Bitcoin based on Doge's idea. Maybe Bitcoin even just pumps to the all-time high again, like this, and does this. And the higher time frame thesis on Doge plays out. And you'd say, well, that's impossible. But is it really? I mean, is Doge really that correlated to Bitcoin here? 100% pump, 60% pump, 30% pump in this case. If we overlay Doge's chart here, I'm not even going to do all this. You guys can look into it. But anyways, I just like to trade each chart's structure independently, right? Like, I think this is kind of an interesting idea potentially for a local long setup on Bitcoin. But if it doesn't happen, then I'm not going to get it. If it goes straight up, then I'll print on my Doge long. If this happens, probably Doge will nuke and I'll lose that, and I'll take a long setup down here on Bitcoin. I think that's the best way to approach trading multiple assets, even if they're correlated. Just structure your trades independently. Don't try to like predict what everything is going to do based off of one idea. Okay, I'm going to answer this question from Matteo, and then I'm going to go. Matteo says, Lucky, I really don't know what to do anymore. Been 2 years into crypto and went through every mistake you could possibly imagine. Down 60% now. My parents need the money by end of year to repay debt. Is there anything you could advise me? Any tips that could help me? Trading mindset, discipline, risk management, etc. I've been learning every day for hours, but simply can't move. Are you in the Discord? I kind of recognize your name, but my memory is escaping me here. If it's from the Discord, and Matt is a common name. I'm just trying to remember if you're a member in the Discord or not. I don't think you are. I think I recognize your name from the Discord, but I don't think it says a member. Oh, you're a paid member? Because my advice will be different if you are, and my questions will be different. So you're right here answering, so I'll just ask you. And you can even, you can just respond here, I guess. Have you gone through all of the educational materials? How long have you been a member? And are you paper trading? Or obviously you're down 60%, so you're live trading. Okay, so you're not a paid member in the Discord. Well, honestly, my advice would just be like, join the Discord and work through all the educational content and paper trade, and don't try to make money, because yes, your parents need the money back by the end of the year, but how are you going to do that if you're a losing trader? I mean, you've lost the money trading. You aren't a winning trader. If you keep trading the way you're trading, you're going to just lose more money. You've been at it for 2 years. If you can't afford to join the Discord, then start paper trading and work through as much of the educational content as you can. I would say watch all my risk management stuff, because it's all about sizing. I would also just say this, you know what? Like, it's such a missed opportunity. If you're in the public Discord and you're, kind of struggling this way, this is what is going on every day in the members Discord. It is 10,000 to 1 output. Everyone is sharing their trade ideas, talking about their trading psychology, talking about how they executed this, executed that, what trades they're in. People are trading full time, and there's lots of traders here making lots of money. In the members Discord, it's literally, the public Discord, it is a ghost town. I mean, we do have some people in here which I recognize, and I think they're gonna really benefit from it, talking through and sharing their trade ideas. So if you're in here, Matteo, talk through, even in the public Discord, your trading ideas. What are you doing? Like, explain your idea. Say, hey, I'm going to take a long here, and this is my plan, and I'm going to risk this amount, and my target's going to be here. And someone might pop in and say, oh, why are you doing that? And you might say, well, because of this. And it's like, they might ask you some questions. Do you have any other examples of that? Maybe even some members would pop in here every once in a while. And you might start realizing, oh, I mean, what I'm doing doesn't really make any sense. Like, if somebody asks me questions, because here's the problem. You think you've identified your issues, and you're saying you've been losing for 2 years, you're down 60%, you need to make money fast. Okay, I mean, it's a recipe for disaster, basically, to try to learn, because you put making money fast out of your head, because you need to first just paper trade profitably. But you're asking me, you need help with that was trading, comma, mindset. I thought it said trading mindset. trading mindset, discipline, risk management, etc. Been learning every day for hours, but can't move on. Trading for years. You don't even know what your problems are yet. You don't know what you need help with. You might not have anything resembling an edge. I don't even know what you're doing with your trading. Do you journal your trades? I mean, you should have over 2 years, I'm imagining, a ton of trades. What are you doing, right? Like what show, you should be able to show your win rate, your average win, your average loss. What is your trade system based around and why? And without all those things, how can you fix anything, right? You don't, I don't know what your trading issues are, and frankly, I just don't have the time to go through every person's individual issues. But if you're not doing just the basics, then you aren't going to succeed. And probably, it sounds to me by what you're asking here, you might just be kind of like, have to go back to save the capital you have, go back to the basics, start paper trading, trading with minimal funds, and build some consistency before you start trading with money again. Your capital that you have right now is precious, and preserving your capital is probably one of the most important things you can do as a new trader. I've done some posts on the math of all of that, but stop losing money. That's the first thing you need to do. Stop losing money. And it's not your cost of tuition. Your cost of tuition is joining the LITF. That's the cost. You pay tuition, you get learning, and you get learning experience or learning materials. You make progress as a trader. That's how a tuition works. And you see progress, right? It's not from just losing money for years in the market with no idea what's going on. And you can do it on your own. Maybe most people can't, but if you do, stop trading with real money, stop trying to make money, and start documenting your trading process. No, I'll even challenge this. So he says, thank you so much for taking your time. You're welcome. To answer my questions, to be honest, I've mainly lost money in horrible spot positions from influencers. Been profitable trading on paper for a few months though. You didn't lose the money from influencers. You lost the money from yourself. Okay, you chose to follow these influencers. And you can say, oh, they tricked me. It's like, you trick yourself. I mean, I don't know. Is that really you're this is why I'm a big fan of extreme accountability as a trader, because you just have to be. It's your money. It's your trade. You're putting on the trade. You've got to manage your risk, manage the outcome, understand what you're doing and why, and you can't afford to blame anyone else. And so, you're asking me right now, what are some advice on trading mindset, discipline, whatever. I've been trading 2 years. I'm down 60%. I give some stuff and you say, well, honestly, I'm a really good trader. Honestly, I'm a good trader, but the reason I've lost all my money is I've followed influencers and lost it all that way. Well, hey, then you don't need my advice. Sounds like you're a great trader. You're honestly doing quite well, actually. You only lost your money because you followed bad influencers. Well, I'm like, okay, well, you got it all figured out then. I don't think it's true is what I'm saying, or you wouldn't be asking. And if it's true, then I'd say, okay, I guess stop putting all your money into spot influencer calls. But otherwise, sounds like you're a great trader. And the reason I'm being so blunt about this is because, hey, we got to get into reality. It's like, you're not going to make any progress if you've come from saying, I need to make this money. I've lost 60%. I study every day for hours. And any advice? And then as soon as I say, like, you gotta do these things, your answer is basically like, I've actually been doing really well. It's just I lost my money following bad influencers into spot positions. It's like, well, then you wouldn't be asking me for the advice. You'd say, you'd already know the answer. You're doing really well. Keep doing what you're doing well, and don't follow influencers. But I just don't think it's true. So I don't want you to delude yourself, because you will never make the changes you need to make. We tell ourselves a lot of things to keep ourselves, emotionally intact, I guess. And as a trader, you just can't. You have to cut through the bullshit. You really do, because listen, you're going to lose everything if you don't. You'll lose everything. And it's just not worth messing around, you know. Give your parents the 40% that's left, I guess. Because if you can't start getting serious, then you should quit now. And why are you trading with real money if you're not like you cut down the size and trade with the dollar? You're saying you're trading really well paper trading, but you can't trade with real money. Well, keep cutting the size down until you can, and start low and work your way up higher. I would just like to see you post some stuff in the Discord. Like, what trades are you taking? Like, do this. You'll have at least dozens or hundreds of people, or maybe thousands of people see your trades. Post your trades. Say, this is my plan. When price does this, I'm going to do this, and my validation's here, and I'm going to be risking this much. And then when that does it, someone will say, oh, how'd your trade go? You say, oh, I didn't take it. Or maybe you just find yourself posting really bad trade plans all the time. Who knows? But you can get some accountability in the Discord. Oh my gosh, I feel like I'm in Groundhog Day, because I swear not only have I answered this question a million times, I swear I've answered it to Joe. I swear you've asked me this question, but maybe I'm crazy. I typically use market orders. Sometimes I use limit orders. You have to understand, I've been doing this every day, like 15 hours a day for years, and whether it's in the Discord or whatever. So I've had the same conversations many times, which is, if you join the Discord, let me just give you a quick rundown of what you should do. You can come into here. There's tons of educational videos, tons of write-ups on different concepts that you can read through, and lots of different things that you should just go through, breaking down risk management, order flow, scalping, volume profiles, different things. These are 10 to 15 minute videos. They're not hard to watch. You click through, you can read through different concepts. Doesn't take long. There's a bot. It's really good. It's trained on tens of thousands of my updates, all the educational materials. I think it can even watch videos, because it was referencing something I said in a video at one point. But you can ask it to like explain you, like, for example, here's a screenshot somebody asked. They were asking, can you read the screenshot and tell me what it's referencing? And it does a pretty good job of referencing everything that's on the screenshot: the point of control, value area high, the 618, how it's pulled, what pivots it's pulled from. And it will give you the frame of reference for the question based on what I teach. So it's quite good. So you can basically use this, go through the educational content, and then you have all my live updates. And that's just a great way to progress. And then, you know, you'll find people quite active in the members chat. Again, this is just today. I mean, hundreds and hundreds and hundreds and hundreds in just one of the channels, and people posting in the other channels too. But I'm just saying, there's a big difference between, you know, people who are in here trading every single day, talking about their trades, and just not, right? Like, and I think most people are pretty aimless. I'm having to pay $1,000 to get people to post some charts here. Trying to inspire people a little bit. What I would say is this, Matteo, just to kind of give you my final piece of advice, is just take it super seriously. I want to see charts. I want to see numbers. I'm not necessarily going to solve all your problems for you or any of them, but like, post what you're doing and what you think your problems are. You don't need general advice on a live stream, like a slogan that I can say in a sentence, like, you know, if you try your hardest, you'll never lose, or something. I don't know. It's like, keep at it, slugger. You need to get into the nitty gritty. You've been doing it for 2 years. Like, you need to know exactly what your problem is, the problems you need to solve are, and solve them. And that means journaling. That means going through all of your trades, and you need specific things. You don't need general advice. You need specific things. It probably depends on price point a little bit. Somebody's saying, is it better to join as a full member or the Learning Ape? Learning Ape basically gives you just all the educational materials, like the static materials, and then the other one, which I think is pretty valuable from as a learning tool, but it's really up to you. You could try, you know, a month of each if you like, but it's where I actually break down all of my trades live, right? And they aren't meant to be signals, but they're meant to be me demonstrating the concepts from the educational materials on my trades, right? So it's, you have the educational materials, you understand the concepts, and then you see me demonstrating them. You know, somebody just posted the other day, I think they posted it in here, and I'll just be honest. I mean, I recommend everybody goes through the educational materials highly, because, but somebody just posted that they haven't gone through the educational materials and they're doing super well. So I'll just put this as an example. He was responding to someone else and he said, I know it sounds too good to be true, but I made my first month back and more with my first trade. Starting my second month sub now, my P&L is 2x monthly sub. I have a larger trade in the green with stop loss, so in reality, I've made 5 to 7x the sub already. I haven't even had a look at the educational materials. Have just tried to understand real-time posts and imitate them. Lots of wins. Create my own setups around some principles. Lots of loss. Eager to take a trade. Thankfully, when I trade my own ideas, I bet small. Do yourself a favor, cut some of the other expenses and take 1 month sub. Then work like crazy that month and see if that works out for you. If you've been at it for 4 years already, 1 month should be enough to make up your mind. He's talking to someone who's been struggling for 4 years and considering becoming a member. So what I would say is this. The reason I do the the live updates is educational, right? It's not to be signals. I want people to understand these concepts more, and certain people are probably going to learn better that way. Certain people are going to understand those concepts more easily. I want to encourage everyone to go through educational materials, because I simply just don't want a bunch of people that don't have any idea what I'm talking about, or they don't even know what a fib is, or they don't understand basic, simple concepts of trading, asking me questions about my live trades as I'm trading, that are like, what is a stop loss? Like, go through the educational materials, but some people are going to learn much more easily through live updates. And yeah, they're educational in their own right, but they certainly aren't something that is probably going to be able to be utilized by a brand new trader. Like, somebody doesn't understand any basic concepts, the live updates aren't very worthwhile. So I would say doing the other membership is probably better first. All right. Let's end the stream now. I think. I mean, I'm gonna go on with the rest of my damming along. Might not work. Blah blah blah. We'll see how Doge plays out. But yeah. What can I say? There's not much else to say. Exactly 2 hours. Let's get out of here.